So we'll talk a little bit about Tetra. We'll talk a little bit about the macro environment of digital assets, try to tell you what's been happening the last 24 months, what we've built, and essentially what we think is coming ahead. I have quite a few slides, and I'll try to be as brief as possible on the information. So essentially, for those under a rock, 2024 was a massive change in digital assets for various reasons, but none bigger than the launch of ETFs in January of 2024. So you've seen the most, by all means, the record launch of any product ever launched in the launch of the Bitcoin ETFs. At time of writing, there was about 53 billion sitting in BlackRock alone in just 1 year. I think the number is closer to 110 across the industry of billions of assets accumulated in a single year. You've had ETF launches of other products or layer ones as well in the Ethereum ETF launches, and you see how they stacked up over the year. And you're seeing some continued momentum as that. There's a lot of filings happening right now in some of the, if you're paying attention to the journal, et cetera, that a lot of issuers are launching other blockchains as well, or trying to launch other blockchains. The SEC has Solana as a blockchain in front of them right now, and actually on the CSA side as well, as of this week, you have seen some filings out of Canadian issuers for additional blockchain products. So really a fundamental deal that culminated in a 125% return on Bitcoin in 2024, the best returning assets or financial market asset. Why did we get there? Well, I mean, a couple of things. The ETF launches were a big thing. Obviously, you also have now President Trump at the time, nominee supporting the asset. He started in, pretty early in 2024. You saw an enormous amount of capital flow into his campaign from the industry. Really were looking to have him win. Obviously, he won the election, which really drove the price even higher. SEC Chair Gary Gensler, who's no longer with us, who resigned. You also had the CFTC Chair resign. So everybody that's been fighting against this industry in the US for the last couple of years is essentially out, and you've seen incredible support now coming in. You've also seen an executive order last week, that's coming down from the crypto czar, David Sachs, essentially indicating that, they want to make crypto and AI a huge focus of development in the US. You've seen some progress as well on the Canadian side where stable coins, so for those not familiar with stable coins, they're essentially dollar denominated tokens that you can transact on blockchains. So you've seen essentially a US issuer be approved in the Canadian market to essentially sell their product or have their product available on exchanges to various consumers. You've also seen the MiCA framework in the EU. So the EU developed a very specific blockchain regulatory framework that came into effect in December of last year. So lots of regulatory change as well. Some of the metrics I thought was interesting to share. So there's two surveys, and apologies, the formatting here isn't great. But the first one is essentially EY 2024 survey, and the second line is essentially a KPMG survey. When going out to institutional investors, some of the highlights, 67% of institutional investors actually already hold digital assets. 38% of them believe that they'll have 1 to 5% allocation. 55 think they're going to increase their allocation over the next 2 to 3 years. 94% see the value of what blockchain technology is doing. KPMG, 75% own crypto directly. So again, huge numbers, big momentum, a lot pointing to a changing landscape in digital assets. Now, price appreciation of tokens is great, and there's certainly an aspect of investing in the various asset and seeing price appreciation, but really it's what the technology can do. And tokenization is always the big trend that everybody's chasing. So some of the surveys and the statistics here, according to McKinsey, by 2030, about 2 trillion of assets will be tokenized onto blockchains. We think this is actually conservative because everything is getting tokenized. The concept of digital grid is moving forward, and essentially anything you own anything you transact can be tokenized, and eventually I believe it will. So tokenization, a big play. You've seen essentially cash get tokenized very successfully, and I'll talk about that in a minute. You are now seeing high yield products come to market more and more via tokens. Those two in parallel are leading to collateral, essentially structures being implemented by various organizations. So there's a lot of momentum in that. In Canada, we've seen real estate plays come out and serve the tokenization. And at Tetra, we work on various opportunities on the tokenization space as well. I mentioned cash. Some of the knock this industry used to get is it's too expensive to transact, it's too costly, it's too slow. Well, guess what? That changed in 2024. Some of the statistics that I wanted to share with you, there were more stablecoin transactions in Q2 of last year than on the Visa network. There are more people exchanging value on stablecoins now than there is, using credit card rails. And those numbers are going to grow even more. Your cost of transactions, right? A wire is about $40 to $200, and you don't know where it's going to get there. You used to have a price tag of doing a transaction on the Ethereum blockchain of about $12. That moved to $0.01 last year because of some of the upgrades that were implemented and some of the layer 2 technologies, which is essentially blockchains built on top of blockchains. So speed of transaction is here. Low cost, what that means is there's a lot of payment activity that's coming to go onto the blockchain. There's a huge push right now into the US on payments, facilitating payments. One of the largest publicly traded company, which I won't name, is doing a big push on Coinbase on payments. They have a full campaign on it. All of this is great, but it doesn't exist without custody. Securing the assets, right, is fundamental to this entire infrastructure. Some surveys here, essentially, when you're talking to institutions, they want faster access to fund, easier integrations to their back office system, improved compliance support. Compliance, security are big themes, trusted counterparties. So there's still a lot of work to do on the infrastructure space, which is where Tetra comes in. So essentially, Tetra is and was Canada's first provincially regulated trust company. We got licensed in 2021, but our inception came out of Quadriga CX. So for those not familiar with the Quadriga CX event, in 2019, you had a massive failure where essentially a founder left with the assets on a crypto trading platform in Canada. That forced the CSA and the Canadian regulators essentially to start creating frameworks to regulate crypto trading platforms. And out of that, essentially, Tetra was born because we thought that qualified custody would be a natural evolution to that. So it's one thing to, basically regulate the access point to these tokens and assets for retail users, but you also have to regulate who's holding it and how to prevent, some of the things that you saw. We also added FTX there because obviously they were doing all sorts of things with their customer assets, right? With a third-party custodian, that activity would have been impossible. So Tetra is fully regulated. We're a Loan and Trust Corporation Act company out of Alberta. So we are, headquartered out of Calgary. Like I said, we were the first. We worked with the regulators for over 2 years to grant the license. We meet the definition of qualified custodian under national instrument. And what's very important about Tetra is key control and the assets are in Canada. So that makes us very different than any other American companies that are servicing Canadians or the space because the assets are secured here. They are under Canadian jurisdiction, regulation. There's no jurisdictional risk, limited consumer risk, et cetera. None of it is possible without the team. So we have a pretty experienced team at Tetra, lots of experience across various sectors, from a regulatory and compliance background on some of the team, as well as on, a couple of technologists. We also have some traditional finance individuals, including myself, having worked in different asset classes and different financial organizations in Canada and the US. And of course, the success of the company is because of that team. Looking at the regulatory landscape, it's important to understand that Tetra is heavily regulated, and we like that. It's important for us, right? There's a lot of counterparties that are overseeing us, and that's good for the consumer, that's good for national interest, and you know, it's certainly good for Canadian innovation as well. So we are regulated by Alberta. We're also a FinTrack registrant. But if you look at our client base, they're either regulated by the Canadian Securities Administration or by CIRO, and those organizations also have looked through into Tetra, which means that Tetra, again, is under the microscope at a lot of levels, but that's good because it provides trust, transparency, and security for the assets, leading to risk mitigation. A lot of milestones at Tetra over the last couple of years, and you know, we thought we would present a few. As the leading company in Canada for regulated digital asset custody, it means that we get to launch a lot of firsts into the market. So we were first to launch NFT custody in North America. We were first to do exciting stuff like audits, like SOC 2 Type 2 audits, and get those to markets. We also helped develop the proof of reserves framework that's now implemented with other counterparties in Canada, including you know, other trust companies and some of the crypto trading platforms. We launched a couple of key products in the Canadian space, including staking on the ETF side. Worked with some of our ETF partners to bring those products to market. And you know, as we've continued to grow, essentially we've seen other firsts into market and other product opportunities, and we'll talk about that in the 2025 outlook. Incredible milestone for you know, obviously our investors as we reach profitability in Q4, which was very important. You know, there's been an incredible amount of cost focus, and as well as you know, strong momentum in the business have led us to profitability in Q4. Some of the metrics on the company. 400% CAGR growth, top line growth in the last 4 years. We've looked at, you know, over triple digits of client growth and annual asset growth in between 23 and 24. And a metric that I'm very proud of, we've securely transacted $15.6 billion since 2022, $4 billion last year alone. Those numbers are important because essentially counterparties trust us to securely not only have the assets with us, but transact them between different pieces of the ecosystem. And you know, we've had some great numbers there. Our value proposition versus US players is also very good and highlighted here, but I wanted to lean a little bit on what Mr. Caldwell said. We work with our clients. We're friendly. We care about what they do. We help them navigate the landscape. That's why we work with a lot of products that are first into the market, or that you know, are essentially coming in where they don't really know where the regulatory spectrum's going to land. They don't really know what needs to be done to some degree, but we partner, we invest into that partnership, and typically it leads to very strong relationships with our client base. And that's fundamental to what we do. But we also are, I would say, more open to various ideas versus some of the larger players, which at this point we mostly compete with some of the large US companies that are pretty set in stone on their product offering, what they look at, and sometimes it baffles me that they're not even returning client calls. And you know, our customer focus is one of the reasons we win a lot of deals. Now on to the exciting stuff. You know, we've built the leading platform for digital asset custody in Canada, but we think there's a lot more we can do. So first of all, as I mentioned, because of the lack of attention that US players are giving to some of their clients, we think we have an opportunity to expand at least in the US or more internationally with our client base. You'd be surprised how many people have digital assets out there. I have an 86-year-old lady that has $250 million of Bitcoin. Essentially, she needs services. She needs a trusted counterparty. She's through succession planning right now with a family office. And, we can help them essentially build their infrastructure. So we think there's a unique opportunity for us to service these types of clients that are pretty niche, but actually where we bring a lot of value to the table. Secondly, as a player that's been working with various technology companies over the last few years, we see a massive opportunity in selling our software out to various organizations. When you think about it, anybody that is not in digital assets will need to be in the financial sector over the last couple of years. A lot of organizations right now are saying, how do I do this? How do I get started? How do I, choose a custodian? How do I do on-chain monitoring? What is my compliance going to need to look at? We have all of that solved with our software product, Unity. So we're looking to take that out fully to market, and we're very excited about that. And then, as Richard alluded to, there are fundamental pieces of the regulated financial market structure that needs to be essentially solved for on the digital side. So there's still a lot of opportunity on the regulated product side. We have a strong reputation into the Canadian marketplace. We think we can lead some of these new products into the marketplace. Those discussions actually take time because they're with the regulators. You need to create the framework. But we think we're very well positioned to solve some of these problems, specifically on some of the regulated products. I think clearing and settling is the obvious one, that everybody is very top of mind. As things or assets move more digitally, you will need clearing houses that can handle this type of activity. It's very different than the other products that are out there today or what's available from a technology and product service. And I wanted to spend a little bit of time as well on Unity and why we think it's such a unique opportunity. Over the last 3 years, we've essentially invested heavily on our own technology to make sure that we can stay lean, efficient, and cost-effective. But out of that has essentially born a platform that we think can be utilized by other financial institutions, and we've seen a lot of interest. As your product suite grows as an issuer or essentially a financial institution or a family office, by definition, your infrastructure is going to grow as well, and you're going to have to see more counterparties and have to deal with more players. It's very true for digital assets, but there's no maturity in digital assets at the moment. So what you can potentially do with a single banking partner right now in traditional assets, you might need 10 in digital assets to do so. Our platforms essentially allows you to work out of a single system. It aggregates all the information. More importantly, that information is consumable via API. It's very efficient. We do a lot of the heavy work for various organizations. It will allow some of them to launch within weeks versus what would be months and years to basically solve a lot of puzzles for digital assets. We're also already SOC 2 Type 2 audited, which is a very important piece as well of the puzzle. So we're very excited about this. This is going to be a key part of our growth in 2025. When we look at our product cycle, our essentially sales pipeline, we are converting very quickly sales on this product and see it as a fundamental offering for Tetra on a go-forward basis. And then finally, none of it is, I'm looking at the timer, Liz. I'm doing good. Okay, perfect. And then none of it is possible without our investors as well. So obviously, another thank you to the Urbana folks and everything they've done, and Richard and the team as well. But as you can see, we have a mix of essentially infrastructure investors or financial infrastructure investors as well as digital asset companies behind us, which I think provides a decent blend essentially of advice and support as well, because the two sectors, in my humble opinion, are colliding very quickly and getting closer and closer together. So that's Tetra, my outlook, and what I see coming out of 2025. So thank you so much for your time, and happy to answer any questions.
Didier, I ask this question as a financial advisor, and a concern that I have for my clients. On one hand, it looks to me like the US financial system lacks in-depth regulation from time to time, but has more draconian policing action. I think of our own TD fined $3 billion. Whereas in Canada, we seem to have a more paternalistic attitude. We have lots of regulations, but we don't have draconian policing. For example, that company, Quadriga, the $21 million, do you know if investors were ever repaid a cent?
I believe, so it's EY that was doing the insolvency, and I believe some investor got 10 cents on the dollar.
Okay. I raise that as an example, FTX, billions of dollars, yet the investors were fully paid back. How do we have this anomaly between regulation and policing? We seem to lack policing in Canada.
Yeah. I mean, listen, great question. The regulatory environment in Canada is certainly an interesting one. I mean, to your point, you have to ask every time you want to cross the street, whereas in the US, they'll say, if you cross the street, you're out of line, we'll smack you. So we certainly see that, you know, in the space. Why is our system built that way? I can't necessarily comment, but I would make a quick comment on the FTX piece. For all intent and purpose, and this might be a controversial statement, I don't think Sam Bankman-Fried was that dumb. Some of his investors and investments returned incredible returns over the last, you know, kind of couple of months, right? So the assets that sat at bankruptcy, if you look at what they were worth today versus, you know, essentially what people were repaid, like if anything, they made a lot of money, to your point. But investor actually argues that they lost money because, you know, some of the tokens, for example, the blockchain Solana, I think the mark to market on the bankruptcy was about, you know, $15 on the assets, now in the hundreds of dollars, right? So the clients actually wanted the token back as opposed to the dollar amount back, right? So there's some issues with that, you know, that bankruptcy file, if I may. But I can tell you the Canadian regulators are very mindful as to not have a repeat event in Canada. And they've been very proactive on the regulatory front for digital assets because it is a little bit of a black mark on the regulated framework. And they've been actually enforcing a lot of on a lot of platforms. And you've seen a lot of platforms leave Canada because of that, right? There's a lot of Asian trading platforms that basically took a view that, you know, we're not going to participate in Canada. The regulatory regime is essentially out of whack, if I may use that language. But I think they're trying to prevent another event. So we'll give them credit on that side.
Just watching your presentation, am I correct in understanding that your service is primarily targeting institutional clients rather than retail clients of digital assets? Would that be correct?
Correct. And there's a specific reason for that. As a loan and trust corporation company, we can only service accredited investors.
Right.
So there's a definition, obviously, of who we can service.
Okay. I'm sorry. I was going to follow up on that. So exchanges would be clients.
Correct.
And
sorry,
retail investors.
Richard would say they're not exchanges, they're crypto trading platforms.
Yeah, okay. And those exchanges would have retail clients.
Yes.
Would it be accurate to say that because of because of Tetra, that my general sense is that U.S. exchanges offer far greater flexibility and you know, functionality to retail clients than Canadian exchanges. It's a buggy versus a, you know, Ferrari on the other side. And so the question is, why is that? And is there a solution for retail clients that is that is in Canada where we can get a high quality exchange, maybe with the custody services that you provide? That would be.
Yeah, no, good question. So a couple of points. I think the gentleman in the front actually alluded to the reason why the U.S. products are so advanced, right? There's just a different regulatory framework, and in Canada, it's been fairly punitive on the capacity to, do various types of activities. For example, margining, lending, derivatives, et cetera, are not really present in the Canadian marketplace, actually not present at all in the Canadian marketplace right now, where you can do that on offshore exchanges. Now, that being said, Canada has a series of leading crypto trading platforms that are fully regulated, that do work with organization at Tetra. Not to get too technical, but anybody that's touching digital assets on the retail trading side, 80% of the assets need to be with a third-party custodian that's qualified like Tetra. So if you're transacting on a regulated exchange in Canada, you can rest assured that your assets are secure with a qualified custodian. Now, without making any recommendations, there's some very excellent ones in Canada that are providing good services, but you also have some global players that are in Canada as well, right? So if you're used to a specific experience on specific products, I would say, the filings are available of who is regulated. Make sure they're fully regulated and compliant with either the CSA or all of them are moving to the CIRO framework as broker-dealers. And you should be able to have a comparative environment for spot trading and some of the activity. But some of the alternative products are not here on any platforms, and I don't think they will be anytime soon.
So hypothetically, if I'm looking to trade on one of these crypto platforms, I guess the primary advantage of working or trading on one of the platforms that are based in Canada that are working with you, Tetra, would be the safety of the custody of my money, and if I'm understanding correctly, and so is that not the case for, say, like one of the decentralized exchanges that are based on, like, fully on chain? And I guess, could you just speak to the advantages of using one of the platforms that that are working with you as opposed to like one of the decentralized ones?
Yeah. So if you're trading, so basically, just for the audience, centralized exchange, centralized counterparty, so regulated counterparty. So yes, there is a regulation layer to the organization, obviously, which means that they are compliant to different levels. In Canada, the levels are very transparent, the terms and conditions under the CSA and as CIRO as well. In the US, depending on where they operate, it's typically the BIT license out of NYDFS or New York Department of Financial Services, and then some of them are regulated in other places. On the decentralized side, which means that it's not a centralized counterparty, which typically means it's a programmatic trading platforms that's not controlled by anybody. Is it safer? I would argue there's likely pros and cons, but I would assume that if you're familiar enough with the technology to trade on a decentralized exchange or trading platform, you're also sophisticated enough to hold your own asset keys, and therefore centralization of custody is not an issue for you. And that's typically what we see, right? People that are using the decentralized environment pretty actively tend to be pretty comfortable with this technology and aren't so worried about the key control and asset control, right? So there certainly are some risks, to utilize decentralized platforms. Typically, it's more who's behind the platform, how open source is the code, are there some potential risks for attacks, et cetera. So I would say it's a different risk from my perspective, but I don't see a lot of people that are familiar with decentralized like trading platforms utilization actually wanting to use qualified custody, right? Qualified custody is really there for users, for institutional products, for exchange traded platforms, products, and funds that are out to retail and to provide that level of security. But if you want to go do all sorts of stuff on chain, then you're probably not worried about the risk there.
One of your slides pointed to the transaction levels that have increased and the costs have decreased significantly. You had Visa, PayPal, and you showed the transaction numbers on the, I think the Ethereum blockchain is down to a cent. So I have a general question regarding use cases.
Yep.
Who is transacting? Is it most of the people that are investing in these coins are typically interested in store of value as a capital asset, not really, buying their pizzas with Bitcoin or anything of that nature. So who is? It must be institutions that are transacting to drive that cost down. And from your insight of the industry, what are these transactions that are occurring?
Yeah, so I'll give a very quick answer, and then I would suggest we have a more thorough conversation. Yes, a lot of the volume currently is institutions, but because of the cost structure and the improvements you've seen the last year, they're going after retail now, right? So they're going after Visa, MasterCard, and those high fees and those kind of remittances payments, right? But currently, institution. The other point I would make very quickly. AI is a huge driver of volumes on blockchains, generally speaking. Because the moment you have agents that need to transact together, they're doing that activity on-chain. They're not doing that activity through your traditional payment system. So the more AI grows, if you believe in AI, the more digital asset volumes are going to grow as well. And that's an important trend to keep in mind.